Well, viewers, thanks for tuning into this earnings conversation with Mr. Single. It's the talking point for the day because simply because of the splendid numbers that Asian Paints has clocked in quarter three. Uh, Volume growth northwards of 30%, highest ever margins, highest ever quarterly profit. Who would have thought that it would happen in a COVID year? Let's ask Mr. Amit Single if he thought as well about it. Mr. Single, good having you. Thanks so much for joining in. Frankly, that's my question. At the beginning of October or the beginning of the quarter, did you anticipate that such a thing would happen, or did it take you a bit by surprise as well?
So first of all, thank you for inviting me on the channel. And we knew that the headwinds were looking good as we ended the quarter two with a double-digit growth, and therefore we were sure that something like 20% would be in order to that extent. But I think what has come in terms of a very very strong festival flavor, which we saw in October and November, I think that has really jacked up the volumes in a very very strong manner. And honestly, we never thought that we could kind of have a growth rate in excess of 30% in terms of what's really kind of coming.
Yeah, I reckon a few confluence of factors, right? I mean, the festive season and the marriage season notwithstanding, maybe the pent-up demand still stayed true. Can you talk a bit about what was the surprising part? Because I'm guessing in part you would have anticipated, you definitely anticipated the pent-up demand because you spoke to us about it then. What is the piece that surprised you, so to say?
Okay, I think there were a couple of slices of the growth which actually looked surprising. One was that we saw that the metros T1, T2, which were not kind of really growing as towns, really sprang back in a very, very strong manner in October, November, and December. And not only did they sprang back, they also kind of really bettered the whole value mix in a very strong manner, because we got the luxury and the premium set of products doing quite well in the cities, and their contribution of the cities is anyway higher to that extent. So that's one component which took us by surprise, because we felt that the paranoia in customers' mind had come down, the cases coming down, the announcement of the vaccinations, I think all led to a positive sentiment. And even metros, cities like Mumbai, Bangalore, Chennai, which have been a little bit conservative in terms of the overall demand conditions, really sprang back in a strong manner. So that's one factor which came in. The second thing, what we never imagined, was a surge in the construction, the real estate sector. And given the fact that a lot of governments had taken some initiative with respect to propelling the sector, I think that really paid off. And we saw that even the mid-level to the premium to the luxury sector kind of took off, which also gave, I think, a prudence to the luxury and the premium kind of set growing with us to that extent. And not only that, we saw the medium level building sector and the government spendings kind of really go up. Therefore, the entire projects business, which is the large institutional sales business, that also got propelled in a very strong manner in terms of larger double-digit growths in terms of what we were able to kind of get in. And the third area, which also came in a very strong manner, was that we got some healthy gains with respect to, I think, the competition all across. And at the end of H1, we were the fastest growing company as we see it in terms of the published results amongst the organized sector. In quarter three, we think that even with respect to tier 3, tier 4, we have kind of notched up gains from the overall market to that extent, and that is reflected in our whole bottom of the pyramid strategy in terms of what we have taken in terms of getting the unorganized consumer into the organized market to that extent. And that has, I think, also looked at propelling some of the growth rates which have kind of come in. And I think the surprise there was that it was much larger than what we really expected. And then what you really mentioned, it is the festive and the marriage season, which was a bumper in terms of October and November, which came in, which obviously propelled the volumes more than what our expectations were.
You reckon, Mr. Single, that this thing of gaining market share from in the organized space as well, plus whatever little unorganized is left, the organized space at large taking that over, both of these trends would continue for you?
Yeah, so the unorganized space is a very big space. It's not a little space to that extent. It's a very, very big space, because we think that this space has been there for many decades, and it will kind of continue to that extent. And as I think COVID conditions are coming down, The unorganized sector is also getting their own distribution and inventories in shape and their reach in shape to that extent. But what we see is that the set of initiatives which we have kind of rolled out, so whether it is at the luxury or the premium end, or it is at the bottom of the pyramid, or it is at our waterproofing segment, okay, we feel that we will continue to gain from both the organized sector as well as the unorganized sector, because even if we see the market, the per capita consumption in paint still continues to be small. And as a leader, I think more than the gains, we keep on looking at in terms of growing the overall market in a very, very strong way, because that enlarges the pie for everything. So I think that's something which is a strategy which we have taken. But having said that, I think the gains will continue.
Nice. Uh, and just a follow up, I mean, we see that in real estate activity around. My family is a real estate family, and we see activity pick up there too. Would you reckon that this is that you may have seen in November and December from organized real estate really starting their activities and selling, that could well spill over into Q4 and the outlook ahead? Because the going seems to be strong from what we hear from all the real estate consultants as well. The number of flats getting sold has just picked up across the country.
See, I think somewhere real estate has been a very unpredictable sector for every economist to that extent. And the only, I think, great part, what we see is that the interest rates are at an all-time low, which we are kind of seeing, which is a big propellant as far as the home market is concerned. We also see that the government seems to be eager in terms of really looking at giving lots of benefits to the home consumers, and we are kind of looking forward to the budget in case there are things which are going to happen in the budget with respect to more dispensable money coming in the hands or more benefits which accrue to the home consumer to that extent. Having said that, what we see is that in the immediate short term, I think some of the trends will definitely continue. It's a question mark whether they will pan out for the year, because even at pre-COVID levels, we didn't see kind of too much activity on the real estate and the construction. But what we feel is that the low housing to the mid-level housing will continue very strongly, because that's a large sector which even government is kind of pushing very, very strongly. And that is something which is a sector which will definitely kind of come up.
Okay. A couple of questions on the cost, then we'll wrap up with the final piece on the ancillary businesses about Asian Paints not just being on the walls, but between the walls. But first, the cost. Let's talk about the good costs first. In Q2, you had cited that the good costs will come back, and it is good that they come back because that means business normalcy. I do see, though, that employee costs were a bit lower, but some of the other costs may have come up. How is that trending? We'll come to the raw material cost in a bit, but the other costs, how are they trending?
So the other costs are, I would not say that there is any cause of concern, but the variable cost keeps on increasing as the volumes kind of go up. And given the fact of the crude going up, there is obviously inflation in the diesel cost, which is there, which would have impacted freight cost to that extent. And that's the other cost which is kind of coming up. As far as employees are concerned, we are very clear that we need to give them the best in terms of what employee can kind of really give. From that point of view, we have looked at giving them further boost in terms of salaries, and that's something which we've already incorporated to that extent. But having said that, I think the other costs are pretty under control, and we don't see any kind of concerns coming in there. The larger concerns are only from the raw material costs.
Which I think you enumerated that you're not thinking of passing on the hikes right now unless these prices stay at the level. So is that the correct assessment, that if crude prices stay and therefore the link prices stay at the current levels, then you might think of maybe taking some price hikes and passing it on?
So there are two forces which are acting in the market. We feel that whether these high price increases which we are seeing, whether they are sustainable or not, we do not know really to that extent, because it's not only crude, it's some other critical raw materials like titanium dioxide, monomers and stuff like that, which are also kind of really heading northwards in a very strong manner. But the other thing which we are seeing is that some softening in the rupee happening as we kind of go ahead. And that's a very big factor, because a lot of these are imported into the country. So we are looking at the dynamics of the two in terms of how really they shape up. And basis that, we would like to take decisions with respect to pricing, because I personally feel that you can't play with pricing so much so easily, especially when the conditions are not normal even now to that extent. It affects the customer segments very strongly. On the longer run, I would look at still growing the top line far more strongly and not really worry about margins too much, because I think they will come.
So I'm guessing that your decision is in favor of growth over margins, but just wondering, what would push you into taking a hike? Would the prices and of all the input materials that you spoke about staying at the current levels, or they moving more adverse from where they are right now?
Yeah, I think if they really kind of go more adverse, I think that would kind of really favor possibly or change the decision in terms of what we are looking in terms of going ahead.
Okay. Okay. I'm looking forward to a Q4 conversation already. But just one final question, Mr. Syngle, and that is what I said, alluded to, Asian Paints between the walls. And I remember speaking to one player in a category that you made foray into in the last 12 months. And for that market leader to say that we are facing the heat because of Asian Paints means that you've struck some right chords. Now, just tell us about how the non-paints businesses are shaping up, how they were in quarter three. How do you anticipate Q4 or 2021 to be like?
So the home decor business is something which has been fairly strong for us, and we have launched a huge number of initiatives around it, which is the Beautiful Home Service. We've launched new stores which have kind of come in, and we are pretty aggressively kind of going in that direction. That has really given a boost to our entire kitchen and bath business in terms of this quarter. And that's something which is really heartening for us. And not only that, we are looking at in terms of really able to kind of service the consumer very strongly as it comes to looking at doing up the space. And therefore, when we look at between the walls, now we have started looking at as share of space within the home to that extent, and transitioning from share of surface earlier to that extent. So overall, what we see is that that's a business which is there to stay with the renovation, new construction, customer demand really opening, the home sector looking a little bright. We think it is there to stay, and that's something which we are really investing in terms of looking at not only doubling our stores which are there in the market, but also looking at putting a more impetus in terms of more categories coming in and really inciting the customer in a very strong manner.
You anticipated 20%, Mr. Syngle, and you got in 30. Quarter four, you expect things to stay stable. Safe to assume you expect another 20?
So I know that that's a leading question in terms of...
Oh, is it? Okay, sorry, I didn't know.
Okay, but I would say that we are definitely looking at healthy growth in Q4 as well. We don't see any reasons, why the growth rate should not be good to that extent. Obviously, I think, whether it has to be 30% or higher, I think we'll have to kind of wait and watch.
Okay, well, we wish you all the best for it to be even higher, but keep up the splendid work, Mr. Syngle, and congratulations on a fabulous quarter.
Thank you so much for inviting me on the channel. Thank you so much.
Not at all. Stay safe, Mr. Syngle. Viewers, thanks for tuning in.